Hello traders, so it was a short trade made on 20th of April 2016 on CAMP Corp. The symbol is CAMP. So this is my daily chart and this is the candle we are looking at. Camped gap below these three moving averages, which is always a positive. This is my 200-day moving, this is 50, and this is 20-day moving average. I'm always looking for a gap low between 5% to 40%. Camp gap low 12%, making it a perfect candidate to trade. So now let's go to my 5 minutes chart here. So I shorted 320 shares of CAMP at 9:45 Eastern Standard Time at the price of 14.76. The entry criteria is first 3 candles should be red, and I enter on the 4th candle, which I did. It is always the open of the 4th candle. My stop loss is always the highest of the first candle, which was 15.36, making it 4%. As you can see from the chart that I made a loss. So CAM fell under my exit strategy number 1. Let me take you to my 10 minutes chart here. This is my 10 minutes chart and my exit strategy says if the second candle on the 10 minutes chart is green, trail as soon as possible. Do not trail till in profit. Stop loss stays in its original place. Taking you back to my 5 minutes here. Now would that apply here? As you can see from the chart, that theory cannot be applied here. I could have gone by the rules, but if I would have gone by the rules, I would have made 4% loss here. There are other things that I'm looking at. As you guys know that I do not look at my RSI. I only look at volume and price action. After I entered the trade at 9:45 and I realized that this one is going to fall in my exit strategy 1. I started monitoring it very closely because I've got maximum losers in my exit plan 1. So I'm looking at these 3 candles here, and also I'm looking at the volume here. There is volume coming in, but I'm still in the game. I do not exit my trade at this point because I want to give CAMP enough time to show me its direction. And at this point, I do not have a clear indication. It goes down at about 10 o'clock and then it picks up again. And I do see there is volume. Not that much, but there is volume, and I see that the price is going up. I'm still in the trade. I did not exit the trade at this time. It was after these 3 candles that I decide to exit the trade. Now, why is that so? I see the volume coming in, and I also see that now it's making higher lows and higher highs. I've got 2 options here, either to stay in the game, take 4% loss and come out, or I can, after realizing what's going on here, I can exit the trade. Well, I chose to exit the trade. Now, there was another reason why I chose to exit the trade. If you see this first candle here, and if you see the wicks, the wick up and the wick down, I have not traded on anything like this before. I also notice that these 2 candles, they are falling inside this big first candle. And this was another reason why I wanted to exit the trade. So I got out at about 10:45 Eastern Standard Time at the price of 15.06, making a loss of 2%. There is another trade that I have made a couple of days back. I traded on SYMC where I made a loss of 4.5%. And that trade also fell under exit strategy 1. So it's telling me that I've got maximum losers in my exit strategy 1 and I have to fine tune it. So does that mean that I'm going to discard my exit strategy 1? No, I will not. Or can I avoid these kind of trades? No, I cannot avoid it. What I'm aiming for is to cut my losses fast on exit plan 1. That's what I'm going to have to do. I have to really fine-tune my strategy 1. I haven't done that yet, but I have to go back to the drawing board and do this fairly quickly, because if I get another one, I'm going to be making another loss. So that's it, guys. This was a losing trade. What can you do? You have to deal with it. Thanks for watching my video.